What up, gang? Back with another video. Today I've actually fixed the camera, so it's actually showing me as not like super white and ghosty, but it is really showing my balding here. Unfortunately, takes the wins with the losses. But anyways, I figured I would jump in here today and talk about the trade that I took on Friday. I didn't take any more than this one trade last week. Price action wasn't bad. But I was just managing the market, and that's probably one thing that I have been really killing lately, if I do say so myself, is knowing when not to trade. In the past 2 weeks, I've taken 3 trades out of like 8 trading days because we've had a few bank holidays in there, and I've taken 3 wins. So I've had a 100% win rate in the past 2 weeks, and there was only one day where I could have taken another trade, but I was asleep, unfortunately. So let's jump in. This is from Friday, the 20th of June. I was just doing my journaling now, so I figured I would do this quick trade recap for you. Coming into the day, bias. And this is, I traded against my bias today, but I traded and I took the trade in line with my bias. And I'll explain how I did that. But coming into the day, our draws on liquidity: one, two, three, four highs, super low resistance draws on liquidity, and I was looking for that to get taken out. Now, the only issue with this is that market opens and we're already sitting at these highs here on NQ. And if you come over here on ES, we are lagging behind, but we're still saying that same story. We have one, two, like all of this low resistance liquidity. So I was looking for that to get taken, and I didn't know how I wanted that to get taken, if that makes sense. In order for me to want to take a long today, I need to see some sort of higher time frame retracement, whether that be a 15-minute retracement or something more significant on the hourly time frame. And that was what I needed to see as my opening confidence in order to take longs. Now, I knew this before I came into the market. I knew that I was either going to be looking for a short to balance out price action. We had obviously equilibrium, you can take anywhere. We also had this hourly fair value gap to play off of. We had that on ES, and then if you come over here onto NQ, this is what strengthened my bearish bias for my bearish trades, that we have this imbalance that's also in line with a unmitigated 5-minute imbalance. This is a very strong fair value gap for me when I see a 5-minute or a 15-minute fair value gap inside of that hourly. And when they're pretty much in line with each other, that is going to be a clear target for me if I am to take a trade in that direction. So why did I take the trade on ES? Why did I take shorts? And why did I not hold down to relative equal Asian and London lows? So market opens, we rip up slightly. I'll get to market open real quick. Market opens, we rip up, take out a high on NQ, and then we dump. Now, what have we done on ES? Because on ES, this is where it became really obvious. We failed to take this high. So I know from here that if we can get some sort of confirmation that this bearish SMT is going to hold, then I'm going to be happy to take shorts, because that's a confirmation that, one, we're either going to retrace on the higher time frame or we are just going to move bearish. Love's giving me thumbs up in there, man. I need to find out how to turn that off. But that is the basis and how I formed a bearish bias, although my original bias was bullish, is because I saw an opening confluence on the higher time frame. I knew we were overextended. We had a good imbalance to target to the downside. Obviously, equilibrium is another target for mine, as always. So what was my entry here? I did want to take entry off of this 5-minute candlestick closure, but it just closed so bearish. We created this. The reason I took it on ES, sorry, I've been waffling. But the reason I took it on ES is because this just looks a lot cleaner to me. We have an actual liquidity sweep. In terms of this high here getting taken, we sweep it and then we actually react off of it. I was looking for the highest time frame inversion, the highest time frame fair value gap from the manipulation leg to get inversed. which was for me either the 5 minute candlestick closure here, but because we were so overextended here, I thought that potentially we could see a 3 minute candlestick close somewhere up here for a better risk to reward. That didn't happen, and so I just entered off of this. I ended up getting filled. Luckily, I got filled somewhere up about here, which increased my risk reward slightly. All this is a liquidity sweep. We have an opening confluence as the SMT, and then I looked for an inversion on the highest time frame fair value gap of the manipulation league. This is a model that I'm using a lot at the moment, and I really enjoy it because my daily bias and the way I analyze the market, this confirmation is absolutely beautiful. Now, I only entered here with $250 risk. I want to start sizing up my risk, and unfortunately I just wasn't able to today because of the fact that we never got a retracement. When I see such a massive extension here, what I wanted to see was some sort of pullback up here to then take another entry down to my confluences for all my targets, and we just didn't get that. So I ended up only making like $170 on the fund account on this, which is just quite honestly just not enough. Like, it's just not even really worth making that much. But realistically, I was expecting us to pull up, and I wouldn't usually want to enter if we're this overextended. So the risk to reward to my first take profit was only about a 0.8 R or 0.8 R. So that was the only issue with this trade, is that my model presented itself. I entered perfectly with my model, but in terms of risk reward, it just wasn't good. And I could have secured a big risk reward if I'd just been trying to drag my nuts and hold all the way down to Asian and London lows. But personally, I still had that bullish bias in place. Like, as I said, when I came into the market, I knew we had this low resistance draw on liquidity to the upside. And so I was sort of taking shorts as if I wanted to be safe. I wanted to be taking profits at areas I know that we could potentially reverse. Obviously, this is a very strong uptrend, so I wasn't actually expecting us to come all the way down and take out London and Asian lows on both pairs. So that's the only issue today, is one, I didn't have enough risk on the table. I think realistically, my funded account criteria in terms of risk management is going to be very different this week. I'm sick of being profitable. I'll show you my month so far. This is something I was working on this weekend. Is just, I'm not risky enough, man. Like, not at all. For me, and for someone who's actually performing well in the charts at the moment, I think market conditions are playing in my favor, or I'm starting to just read them better. And I honestly do just need to up my risk. So, like, okay, for example, say I was risking $1,000 per trade. Boom, we lose our first trade. That's fine. Down 1,000, we win the second one. This was a W risk reward trade. So I would have hit max profit on this, 1,500. Say 1,500 there. Lose this one, that's a small loss. Say I lost like 500, and I wouldn't have even taken that because it was just a mock trade. Say I lost that, $500 down, so I'm back to break even. 1 and 2, and then maybe 3. I've passed the account. So I'm sort of just looking at this now. I've proved to myself these past few weeks that I am profitable. I have been crushing it, and in terms of knowing when to stay out of the charts, I've been doing it so well, so consistently. And so this coming week, it's going to be an interesting one, man. I'm risking $1,000 per trade. I don't care. I'm going to have to pay for my renewal fee anyway. So I might as well go balls to the wall, man. Like, I might as well start trading these accounts with the intent of passing them, rather than trading these like a live account and risking sort of 0.5 to 1%. It's just not worth it for me. And I have enough money now with a job to be able to actually back myself in trading. And $70, bro. What is, like, $70 is not a lot of money. Damn, that was almost critical. $70 is not a lot of money, and I'm actually just going to start backing myself in terms of risk management. And yeah, so I'm gonna play it really aggressive this week. Hopefully, man, I would love to pass this account. If I pass this account, I will be going insane this weekend. I will be so stoked. So that's the goal anyway. So no trades last week except for that one winning trade. Super happy with it. Happy with how we managed the market. I would have liked to capitalize. One thing I think I could have done better is target the center of the fair value gap. But like I said, man, I was playing this one conservatively because of the fact that I still had that bullish bias in place, which I think is super valid. But anyways, that is my Friday from last week trade recap. I will be jumping in tonight and not live trading, but I'll post like a YouTube live trade video of me tonight risking that $1,000 and trying to actually pass this account. So stay tuned. We do have some good videos coming through. And now I've got my camera sorted, man. I'm actually keen to start posting some videos more consistently again. Once again, back on the fake consistency, bro. I've just been tired recently, man. I had someone bomb me today. Shout out to the dude in my Discord, man. That guy messaged me. What do you say? This dude's hella aggressive with it. He said, been 10 days since last video, bro. What the fuck are you doing? Gotta be rising and grinding. W man's keeping me in line. But if you're watching this video, brother, I will be posting more frequently. But that is my trade recap. Stay tuned and love. Thank you boys for watching and all the best tonight in the charts. Peace.